Hi, fellow traders. I hope you guys had a great Friday. I hope you ended the week good. I feel like I had a pretty good week. It was a very interesting week to say the least. I did play around with GME for a couple of days, but I left it alone because what happens too often, you go to the well too many times, eventually it's going to run dry, and sometimes you accidentally fall in trying to scrape up dirt. And I wasn't going to do that this time. I've been in this market long enough. I've been doing this long enough to know that things like this do not, continue. This is a phenomenon. It's never happened before, in recent times since we've had the computer trading, the online trading, and all of this stuff. It actually exposed a regulatory issue that the brokers have. Just to, I don't want to confuse you. It is a little complicated to explain, but to try to put it simply, there's a 2-day clearing period for trades. And so the broker has to put up the money, to cover those 2 days. And what happened, a lot of these brokers ran out of money. I heard Robinhood ran out of money yesterday, and they had to either borrow some money or get some money so that they could handle their responsibilities, with their clearing firm. And it's all centered around these regulations. So it did create some problems as it related to that. But, it was pretty cool to see the big guys get what they've been dishing out for years. The little guys got smart, got together, and took them down. But, unfortunately, this is probably the last time that that's going to happen. I believe they've already adapted. They've already overcome. They took their lumps. But just like us, when things happen to us, we get smarter and we fix it. The thing is, in the long run, they're still going to be the winner. It's no different than, somebody, when we know the casino is the house, they're always going to win. There's always going to be somebody that's going to be really lucky and kind of take a big chunk out of the casino. It happens every now and then. It's not a common thing. So the casino may take a hit that night, but they're going to be fine because they're the house. And that's basically what's going to happen here. But we enjoy it while we can. We ride it until it stops. But here's the thing. You have to know what to do when it stops. When this ride stops, and it will stop, it's slowing down right now. You're going to have to know what to do. There's a lot of traders who weren't really making any money. All of a sudden, got lucky. They went long and held it, made a ton of money. And now they're going to go looking for the next one. But the next one's not coming. Not like this. You're going to get short squeezes, but nothing to what we experienced on GME and on AMC. And a couple of the other stocks, that's what you will normally see. But nothing like what happened with GME. That's probably not going to happen in our lifetime again. It'll probably be some other phenomenon that creates a big price move. But I think all of the firms, all of the investment banks, all of these guys have adapted. They've overcome, and they're ready to move on. And so we have to be ready. And it kind of brings me to, what I wanted to share with you today about, slow and steady wins the race. It's fun to run fast and try to get to the finish line as fast as you can. But oftentimes you may trip and fall, you may miss some things, and when you get to the finish line, things may not be as what they seem. So if you take it slow and steady, and you have that steady growth, then when you get to the finish line, you're going to be an even better person for it. And trading, that's kind of how it has to be. You know, our trading, our strategies and everything are boring. They have to be boring. And you do the same thing every day, execute your same trading strategies every day. It gets boring. What's exciting is the different stocks that we trade, the stories behind those stocks, the movement that we see is different from day to day. That's what makes it exciting. But we have to come in every day and execute our strategy that we can use day in and day out through most market conditions, and that we know how to adapt for, but we just continue so that we can consistently put money in our account. That's what you see me do every day. You guys that's been with me long enough, you've seen throughout all kind of market conditions, I've never changed what I do. And yeah, I may take hits for a week or two, but then at the end of the month, at the end of the quarter, at the end of the year, I'm up. And we keep building. So what I'm teaching you guys is how to grow your account. Most of you don't have enough money to fully fund an account. You may have enough to get over PDT, but I'm talking about having, you know, $75,000 or $100,000 in your trading account so that you could trade a Tesla or you can trade Amazon, you know, stuff like that. You're trying to get fully funded. Some of you are trying to get just over PDT, but you have to consistently grow your account. I've been there, done that. I started with nothing, and I know what it takes to get there, and that's what I'm trying to show you guys. And it's the slow and steady, the boring strategies that's going to get you there. You know, yeah, quick hits come and quick hits go, but they're not consistent. So, you know, that's what I wanted to share with you guys today. Just take it slow and steady. And you'll see me step out every now and then and trade a little bit, because I'm at the point where I can do that. I've made it to that point where I can step out a little bit. I can risk a little bit more. But you guys, when you're trying to grow, you don't want to get outside of yourself. And if you did make a lot of money, you know, fortunate and make a lot of money on GME, you want to make sure you know how to trade. You want to make sure you know how to keep it. Okay? So I didn't give any of my money back this week, and I don't plan on giving it back. And I don't want you guys to either. All right, so let's take a look at the market today. If you look at the SPY, we did lose the 20 early this week. We did test the 50, either pre-market or post-market. I think it was after-market one day. And then we gapped up on Thursday, but we couldn't hold over the 20. And so today we just sold off, lost the 50, and we're on tap to just pull back. I mean, it's time for us to make another pullback to the 100. You can see we did one in September. We did one at the end of October going into November. It's time for a pullback. So it would be 100% within the market's pattern to pull back. And it's not that the market's tanking. It's just that it's time. We need a breather so that we can continue higher. But am I saying that's going to happen Monday? No, I have no idea. You guys know this market and how crazy it's been. Anything can happen over the weekend. And I could log in at 8 o'clock on Sunday night. The market can be up 380 or it could be 350. You know, who knows? So we just have to wait and see. Keep our ears open, listening to what's happening this weekend. And, we'll talk more about this on Sunday. Probably Sunday morning, I'll have a little bit more information and have a better idea of where we're going to go. Now, if you haven't read my disclaimer, you can pause the video there and read it. So SQ was my first trade out of the gate. I couldn't trade the opening range breakdown. I had to wait until it got through here. I probably could have. And I really need to go ahead and start doing this, because I could have gotten in here and then start piecing out. But I didn't. I waited. I got in here and I accidentally took the whole position off. I didn't mean to do that, but I accidentally took it off, and then I ended up, getting in when it came back down, and took some profit here at the 200. This was where I was going to take profit anyway, but we kind of bounced here. We didn't sell anymore, and I ended up getting a little slippage here. I know I need to change the border on this because the white arrow just doesn't cut it. But got stopped out here. But by the time I couldn't even put my stop in, it had run back up, and I just had to mark it out. All right, now once we came back below, we broke the low of this channel here. I got in, it ran down, I got my first cover, and then it ripped back up and took me out. So a couple of base hits here, but they all add up, as you'll see. And I'll cover this trade later. This one is the last one of the day. We'll talk about that later. All right, BA. And I have trouble trading BA. That's why I rarely trade it at the open. I always say BA or Roku kind of like my secondary trades, because I don't accept the risk on these trades. That's why I screw them up. That's why I bail out when I shouldn't bail out. I don't accept the risk because of how these stocks traded in the past, what they've done to me. So if I don't accept the risk, I shouldn't be trading it, and I really shouldn't. And this is exactly what happened here. I bailed out. Oops. I bailed out too soon. Then over here, did the same thing. But the reason why I took this off, I was ready to be patient and let it go. Because again, this was a secondary trade. I'm comfortable with these. But I didn't see the linear regression channel. One of the lines on the linear regression channel here, the bottom channel. I didn't see that here until after I was in the trade. And then when it started to bounce and push up, I just took it off because I assumed we were bouncing here. Most stocks, when they hit that channel, they try to sell through, and then they come back and close back above it. And so I thought we were going back up, but we ended up selling off and making a really, really good move. And, that I missed. But it's all because of this, was because I didn't accept the risk. This, I accidentally got in here when I shouldn't have, and ended up taking it off because I assumed this was bouncing. I should have waited until we made a higher high here, but I just cleared it out and moved on and went about my day. LLY, this was probably the best trade of the day for me. First trade was, I shorted here and took some profit here at the first target. It was a little bit tight. I admit I was a little bit quick to take profit here. I wanted to take it at 208.25, and it did dip down, and as it popped up, I kind of clicked it, and then it came back down, I took some more profit here, and just rolled this all the way down. Took some more profit off here. This was my final target, the 205.10 level. So 205.25 was my final piece. So this was the best trade of the day. I wish I had taken it up here and gotten both of these moves. But as you see, all of these stocks made pretty decent moves today. I just didn't execute worth 2 cents on a lot of these stocks. But, the day ended up okay after all. Okay, TLRY, this is me trying to, adapt, so to speak, to some of these plays that we're seeing. I tried to buy this on a breakout, and it just didn't work. So I bailed out of it. Another one I tried to do, well, no, this wasn't a bailout. WDC, I got this on a channel break here, and it didn't work. Got stopped out. Probably could have held on to this, but I didn't give it enough room. And I got back in. And anytime you don't give a trade enough room, you can always get back in. I just gave up too much profit on this. So I got back in. I took some profit here. And then I messed up with my stop. I put the wrong price in for my stop, and it stopped me out too early. This trade would have worked and gone right to the 200, which was my target. But again, execution. Like I said, today, my execution was piss poor. And the last trade of the day was this SQ. I waited for this channel to break. We got in. The market was starting to sell off. It did bounce a little bit, but came down, hit my first target, which was 213.25. Really could have put it at 213. And then it turned around and bounced, and ended up stopping me out at break even. So that was the end of the day. Really bad execution. But for a really bad execution day, I'll take a $1,300 day. Any day. Any day. So, I did take a lot of trades. I did take multiple trades on the same ticker that were just base hits. We had one home run, that LLY, on that one trade netted almost $400. And I could have traded that a little bit larger, but that's what smaller size. And let me see, didn't I? Hold on. Yeah. I didn't take but one trade on it. And but SQ was a big winner. I had multiple trades on that. 1, 2, 3, 4 trades. Like 4 base hits, basically. And that's what we come up with. And these were the two. I think WDC, I had a loss on this, and then I had a win. That practically broke even. This was the one I took off. And BA, this wasn't really my strategy. This was me trying to trade a breakout. Like, I have no idea what I'm doing. And then BA, this was the one, could have made it. This could have been easily a $500 hit had I traded it correctly. But, piss poor execution, just happy to get what I got. So for the week, for the month, we did really, really well. For the week, ended up 35.73.64. Only one red week. This was a really tough week. But, we made it through. This was, everything that happened that week. So it was a really tough week for me and in the market. So red week there. Didn't quite beat the second week of January. but came pretty damn close. And then, you know, really 82 2019. Not a bad haul for the week. So next week, I'll have the first equity curve of the year. You know, I've got enough data points now to where the curve will make sense. So we'll have that going. And closing out the swing trades, we did trade 7 times, which is a little bit above my average. And finished 1770, 08, 08. So not a bad week. This isn't even counting the GME trades I took. So I enjoyed this month. Alright guys, so that's going to wrap it up for me. Those of you that are going to be in the session Sunday mornings, I will see you on Sunday. If not, I will catch you guys bright and early Monday morning.